Welcome to Echoes of Africa, where hidden stories, bold voices, and untold truths rise from the heart of the continent. Before you dive in, hit subscribe and turn on the bell, because every echo here reveals the Africa they don't want you to see. Africa just built a currency bridge. The Common Market for Eastern and Southern Africa, COMESA, has launched a groundbreaking digital retail payments platform, DRPP, allowing cross-border trade to be settled directly in local currencies across its 21 member states. This initiative marks a major shift in the continent's financial architecture. By enabling commerce without reliance on the US dollar, COMESA is reducing costs, lowering risk, and boosting financial sovereignty for its economies. The DRPP is being implemented by the COMESA Clearing House, CCH, which manages regional payment systems. MFW4A, making finance work for Africa. The first pilot corridor is between Malawi and Zambia, with 2 digital financial service providers and a foreign exchange service provider supporting the project. Kenya's Trade Cabinet Secretary, Lee Kinyanjui, has called the platform a game changer because, for the first time, cross-border trade within COMESA can be settled in each country's own currency. He highlights how this system reduces dependence on scarce foreign currency, offering cheaper and more secure trade. People daily. The system is designed to be highly inclusive. It's targeted especially at micro, small, and medium enterprises, MSMEs, the backbone of COMESA economies. These businesses often struggle with cross-border payments because of high fees, slow processes, and exposure to currency volatility. By keeping transaction costs below 3%, the DRPP promises to make trade more affordable and accessible. People daily. Under this platform, banks, mobile money operators, fintechs, and other financial institutions can connect and perform real-time local currency settlements, promoting interoperability and financial inclusion. COMESA's aim is to ensure that the system supports not just corporate traders, but also everyday traders, women, and youth, making trade more equitable across the region. President William Ruto of Kenya, who currently chairs COMESA, has emphasized the importance of deepening regional integration through strong financial institutions. He pointed to Kenya's increased investment in regional development banks like the Trade and Development Bank, TDB, and Afreximbank as evidence of its commitment. He framed these investments not as charity, but as part of a long-term strategy to strengthen homegrown multilateral institutions. The pilots in Malawi and Zambia are already in the user trial phase, reflecting COMESA's methodical rollout strategy. Through this trial, the system will validate security, reliability, and real-world usability before broader expansion. COMESA's move is aligned with Africa's broader vision for financial independence. It complements the Pan-African Payment and Settlement System, PAPSS, a larger infrastructure developed by the African Union and Afreximbank to enable real-time, continent-wide settlement in local currencies. Beyond reducing costs, this platform has profound geopolitical implications. By reducing dependence on the US dollar, COMESA strengthens its economic resilience, shields member states from external shocks, and deepens regional monetary sovereignty. For MSMEs, the impact could be massive. These businesses represent about 80% of companies in COMESA countries and account for 60% of employment. Many of these firms operate at the margins, and high transaction costs have historically limited their participation in cross-border trade. The DRPP could unleash a wave of business growth and inclusivity. Moreover, this system could change the power dynamics in African finance. Rather than routing payments through foreign correspondent banks, often in the global north, African countries can now build value within their own currency systems. That means more liquidity stays on the continent, and forex reserves are preserved. There are risks, of course. Currency volatility still looms, regulatory frameworks need alignment, and cybersecurity must be airtight. But COMESA's cautious, phased rollout suggests it is aware of these challenges. The involvement of fintechs, mobile money providers, and central banks gives the initiative a robust foundation. MFW4A, making finance work for Africa. If the DRPP scales successfully, COMESA could set a model for other regional blocs in Africa, from ECOWAS to SADC, to replicate local currency payment solutions. Experts suggest this could trigger a network effect across the continent, significantly boosting intra-African trade and economic integration. In the long term, this could reshape how Africa trades with itself and the world. With a strong digital payments infrastructure and local currencies, African economies can become less exposed to dollar volatility, more resilient, and more self-determined. COMESA's digital retail payments platform isn't just a technical upgrade. It's a declaration of financial independence. It's about dignity, giving small traders, women, and young entrepreneurs the tools to compete. It's about regional unity, building bridges, not barriers. And it's about power, letting Africa control how it trades in its own money. This is Africa's currency revolution, and it's just getting started. You've been watching Echoes of Africa, where every story carries the sound of tomorrow. If this moved you, subscribe now, like, and share so Africa's voice never fades into silence.